Oh man, so it looks like October has lived up to its name of being the most volatile month for stocks. The markets are absolutely yo-yoing. On Monday, the markets were down. We thought, have we reached a bottom? Tuesday, bounced back up. It looks like we had a great dip purchase there. But now, all the major indices to here on Wednesday are back down. Let's take a look. So we can see the S&P 500 is down 0.7. You can see the Dow down 0.87 and the Nasdaq down 0.5%. Russell down over 1%, and even crude slightly dipping down, although that's at highs, and gold is down as well. So what is going on? You can see a few key players really driving it are the growth stocks, and Bitcoin mining companies are pushing up, and we'll come on to Bitcoin in a second. But if we were to search the other way, you will see that the market is really green, and it's led by a lot of the recovery plays. JetBlue, you've got American Airlines down, you've got Boeing down, GE down, Facebook and Apple are even down. What is going on? So let's take a recap at kind of what is causing this volatility in the market. The first thing is energy prices are increasing. You've got the energy price concerns, and you've got the interest rate concerns coming in. If investors are concerned that those two things there can lead to higher costs for individuals, consumers, as well as companies, and that's weighing on the stock market right now. The 10-year at the moment is pretty flat, although it did peak when the job figures came in. So we can see it's pretty flat at the moment, although we did get a peak in the morning, slightly higher before coming back down to 1.516. So you can see that here. Okay, now what happened was we had our jobs figure this morning, which came in the ADP private jobs figure. Now, this gives you an indication of where the headline non-farm payroll figure will come in at, or which is due on Friday. And let's not forget, Jerome Powell, the chair of the Fed chair, has said if we get a strong or even moderately strong jobs figure, that could be the green light he needs to announce a taper in November. So don't forget, the Fed meet on 2nd, 3rd November. And they're going to be using the data from Friday plus the CPI data we get on the 13th of October to inform their decision of whether we taper or not. So this is weighing on markets, and this is why when that came up, the yield on the bond spiked and we saw a little bit of a rotation out. Now, what else is going on? So the expected figure on your ADP, the expected figure was 425,000 new jobs. That came in at 568,000. Okay, so a big beat there on the ADP private jobs figure. Now, if that is anything to go by for Friday's figure, that could all but be the confirmation, the green light already here, that Friday is going to give Jerome Powell the positive jobs figure he needs to start his tapering process. So that could definitely set the tone for what is going on in the market. So this is weighing on investors. Like I mentioned in previous videos, fears of inflation and high energy price costs. We had oil hitting highest levels since 2014. So WTI crude nearly topped $80 US. So that's a 7-year high almost on oil. So that's a massive increase. The interest rates being a concern. Obviously, interest rates will be increased if inflation is an issue. That erodes the purchasing power of your bonds, so yields go up. It also means growth stocks are less attractive. Now, you know my view on this. I've made it clear that I'm seeing this as a buy the dip opportunity on some of my favorite growth stocks. Okay, so I'm using this rotation out of growth as a chance to get into some of my favorite growth stocks. I mentioned Lemonade, I mentioned Matterport, Enphase, Palantir, these kind of growth stocks at good prices right now. So if you have any growth stocks on your high conviction list that you want to build out your position, now is a good time to start looking at these dip entry levels, because you can really start to find good pricing now that the market is looking for a floor, right? The market's looking for that lower point, and as it's trying to find it, now's a good time for you to start nibbling in, because once these concerns are out of the way, that's going to give the green light for everybody to rotate and FOMO back into high growth stocks, because they're not going to sit in value plays and, you know, low risk investments for too long. People are only going to sit on cash, real estate for only a while, right, before they're going to want the higher yields again. And that's when they're going to FOMO back into the high growth stocks, because their couple of percent elsewhere is not going to do it for them. So now's a great time for you to start picking up on those. The other thing weighing on the market, as always, is the debt ceiling crisis, right? And again, these politicians are just making life difficult. Janet Yellen, the secretary, came out and said, we need to decide by the 18th of October. So she set herself a deadline. And, it's just the politics are bickering, but they should really get this sorted out. If they don't, it'll be the first time the US has defaulted on any of their payments, and that could lead a risk to their credit rating. And if they mess up their credit rating, which even though people know that kind of it won't happen, it'll be a tragedy if the politicians allow that to happen. If the credit rating was messed up, then that could lead to higher borrowing costs for the United States and for therefore businesses and consumers. Again, higher interest rates are weighing on this market. The fear of inflation and therefore interest rates are weighing in on this market and causing some of this volatility right now. So at the moment, all eyes are going to be on the job figures and the CPI figures. The jobs come on Friday, CPI on the 13th. And don't be surprised if this market continues to bounce between now and then, right? It can go one way, it can go the other way. We're just in a volatile market. And again, if you're not sure how to trade in a volatile market, check out the video I've made. Type in my name and volatile market, and it's uncertain market, I think I named it, and it should come up. And that should give you an idea of how I think in these volatile markets, because every type of situation is an opportunity for us to invest and prepare our next moves, right? In a non-emotional, pragmatic way. And that's really important. So that leaves us with only one thing left to cover, really, which is, I've made various videos on this, but Bitcoin is getting some massive growth. So if we take a look at, let's take a look at Bitcoin, we can see Bitcoin has broken through its resistance level. And this is not a Bitcoin video, but you can see we've gone straight through into 54,000 on Bitcoin. Okay, so amazing growth on Bitcoin. Another hourly candle has turned green there, which is really showing some strength for Bitcoin to move on to the next level, which is 57 and then 60,000 mark to test. And I've even made a video on why I believe Bitcoin could even be heading up to $84,000 very imminently. And I mean weeks, because as shown by an indicator which I share on that video, so go check that one out as well. So Bitcoin's looking positive, and again, from a fundamental point of view, we need to understand why this happens. These things don't just happen for no reason, right? That pump started exactly when the jobs figure came out. The jobs figure showed that the economy is starting to produce back more jobs, which will give you more fear for inflation and then more fear of money being eroded, right? As inflation goes up, you'd expect your Bitcoin to then go higher as a hedge against your inflation, okay? And these kind of pumps don't just happen with retail investors. This is institutional money leading these massive pumps, because it takes a lot of money to move Bitcoin now. And it's when institutions realize that, we're in a persistent inflation environment, they'd be more inclined to rotate across to Bitcoin as a hedge for that, okay? So don't let people say, oh, this is just this technical pattern or this chart pattern, that's why Bitcoin is pumping. There's a reason behind it. Exactly when the jobs figure came out, this happens. Now, we need to be cognizant of the fact that this could change when the CPI reading comes out, right? If the CPI reading comes out as a complete low figure and it shows that inflation has really started to inflect down, I mean like a 4.5, 4.6 figure, then perhaps we can see a rotation out of Bitcoin, and that could affect the run we're seeing on Bitcoin. Now, obviously, there's other factors to play with Bitcoin, such as it being the last quarter of a 4-year cycle, so maybe it'll keep its strength. But from a macroeconomic point of view, we need to understand that the inflation figures do have an impact on Bitcoin. Now, on the other hand, if inflation comes in at higher than expected, if we see a 6% inflation or 5.5, 5.6, higher than the 5.3 we've seen, that could be a concern for the markets, and we can see an even bigger rotation into crypto and a rotation out of growth stocks. So that's definitely what we need to be looking into over the next, Friday is the jobs figure and then CPI on the 13th. Really important 2 sets of figures before we head into a tapering environment. But I think we need to remember that it's not the tapering that's causing the problem here. It's inflation, okay? It's inflation and interest rates. Now, we know that Fed Jerome Powell is trying to decouple the relationship between tapering and inflation. He's saying, I will taper and then, the interest rates. He's saying, I would taper and then increase interest rates. But we saw from the dot plot that a lot of Fed officials were pro seeing interest rate increases in the back half of 2022. So if Jerome Powell sticks to his timeline of tapering up till June, July, we could see rate increases in the back end after July of 2022. And the markets are concerned about that because they feel, if rates go up, that's going to affect the value of the coupons from their bonds. And it will in fact impact consumers who won't be able to borrow as easily. It will impact businesses who won't be able to borrow as easily, particularly growth companies. And therefore, you're seeing these kinds of rotations. Okay. How long are they going to be lived? Who knows? I think personally, this is a great opportunity to be buying into your favorite growth companies. I mean, let's just take a brief look down this list. I mean, I mean, now you're already getting, Monday, sorry. I mean, there were some great opportunities to buy some of your favorites at really cheap prices. Let's flick down this now. I mean, you've got TTCF still getting whacked, $18. Matterport, 17, still a good place to buy, still juicy. Corsair's getting absolutely hit. I've got a good position in Corsair. Maybe I'll add to that a little bit more, but this one just keeps falling. So it's not really found a floor yet. 4 traditional companies down, 4 GE, Boeing, all down. Like I said, there's a rotation out of those. Even your Zoom is down, Beyond Meat down, ChargePoint, Neo has got absolutely whacked. We know there's a China element to that as well. If it's a good opportunity at Neo. I think 33 is an absolute bargain for an EV company delivering so much. It's just this China issue is weighing down on them. Even Apple's down 1%, sitting at just under 140. Robinhood, you're getting at 41. Still not super juicy on Robinhood. Fairly flat on the day. SoFi 16.15, good pricing on SoFi. So you can see as you flick down this Lemonade at 62. I told you I topped up Lemonade. That's a bargain. Under 70, I really like Lemonade. I've made a video on this, so go check that out if you're intrigued about why I like Lemonade. You've got Tesla sitting at 778, fairly flat on the day, giving their record-breaking earnings. Tesla needs to be above 800. I mean, it's been hovering around 600-700s for a while now, and record-breaking numbers on a run rate for 1 million vehicles despite the chip shortage. Again, I've made a video on that. Go check that out, because that is incredible how they've managed to do that when GM, Ford were really struggling, and their figures have, to put into context, Tesla was 73% up year on year despite the chip shortage. Whereas GM was down 33%, a third of production. Crazy. You've got Google flat, you've got Microsoft flat, Dropbox flat. Dropbox at 28. I've never been able to build a position in Dropbox. I might look at that one. Blink Charging, PayPal, Lucid. I've got a decent sized position in Lucid, high risk stock there, sitting at 24 on Lucid. Peloton's come so far down from the 120 mark to 83. I might start considering building another position in Peloton, actually. I think as winter months, maybe it's just here in the UK, but as winter months kind of pick up, these products tend to do well because people want to go cycling, but they can't cycle here in the UK. It's freezing cold. They don't really fancy it. So let's see if that could be a thing. I'll do some more research into that. Twitter, Etsy, and then obviously your Bitcoin plays doing really well here. Mara, Coinbase, Riot, BTCM, all your Bitcoin plays are obviously pumping as Bitcoin gets to 54,000. Right. So there you have it, guys. That's what's weighing on the market. We've got a traditionally volatile October, and we're getting exactly that. Monday, we got wrecked. Tuesday, it looked like the dip was bought, and we were heading straight back up. And then we're thrown back down on Wednesday. I don't know. By the time we post this video, we could rotate again on the S&P, because that's what can happen in October, and I expect more of this throughout this month. My strategy for the month, like I made clear, is if I see any of my favorites, my high conviction plays coming in at juicy prices, I'm nibbling. I've got cash on the side, and I nibble a little bit and try to build my positions out on those strategically. I'm not going to get emotional and be like, oh, it's a green day, I'm going to chase these stocks, or it's a red day, I'm scared. I've got these price points triggered. I've got my lines on my charts, and then I purchase when I see those prices hit those levels, okay? So just to recap, we know the ADP figure, the jobs figure came in strong, which seems to suggest we could get a strong figure on Friday. They're not always correlated, okay, guys? So we need to be careful, but it has been very correlated. So it suggests we could see a strong jobs figure. If we see a strong jobs figure, people are worried that tapering will start, but it's not the taper that's the issue, it's the rising of interest rates that can come after it. Because once you finish tapering, the only monetary policy you can loosen then is, you can tighten then, is increasing interest rates, okay? And then on top of that, you've got energy crisis. You're worried about energy prices going up. You've got oil heading to, hovering close to $80 a barrel, which is close to 2014 highs. And then you've got obviously fears of interest rates and persistent inflation, meaning people are scared of touching growth stocks right now. Having said that, the NASDAQ is not massively down right now. The NASDAQ is 0.5% down. It is down, but it's not massively down compared to the Dow, which is down 1%. So there you have it, guys. That plus the debt ceiling issue, which I think will get resolved. Evergrande seems to be in the back of everybody's head as well. It's not quite cleared as I thought it would. It's still kind of lingering there as an issue. We saw a few other companies in China miss a few debt payments and defaulted. Nowhere near the size of Evergrande, but it's getting the markets kind of jittery around. Was there some contagion? Is stuff going on in the background which we don't know of? So we'll keep our eyes and ears peeled for that as well. Anyway, guys, hope you enjoyed this video. Hope you found it useful. If you like this type of content, then please consider subscribing, and I will see you in the next one.